Welcome back to Alpha Recap, your quick, smart wrap of the market's big themes. We're coming to you after the close with all the headlines that move sectors today. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone, glad to be here. We've got a jam-packed rundown. AI CapEx, defense spending, energy geopolitics, and some crypto drama wrapping the day. Lots to unpack.
Totally. So, what really stands out here is the tug of war between long-term demand drivers, think AI and defense, and headline risks like hacks and regulatory probes.
Right. Markets closed mixed, with sectors tied to capacity and materials catching buyers, while utilities, parts of finance, and cannabis were more volatile on news flow.
Let's start with the big one, defense. There was a report about a potential $1.5 trillion plan from the U.S. Department of Defense. That story lifted a whole chain: equipment makers, systems integrators, and raw material suppliers.
Yeah, that tracks. Analysts noted that a multi-year defense investment program has multiplier effects on steel, specialty metals, and semiconductors. So companies that feed into precision manufacturing got some attention.
And it's not just the usual suspects in industrials. The story spilled into materials and mining, because if you're building long lead items, you need secure supplies of things like tungsten or DRI steel inputs.
Exactly. Speaking of materials, we saw some concrete financing activity. A roughly $520 million DRI financing, plus project restarts like Stibnite Hill. That put a spotlight on supply security plays.
Investors are increasingly pricing in premiums for constrained supply chains, which is why materials and mining outperformed in today's headlines.
Switching gears to energy, OPEC Plus moved to raise output, yet regional disruptions kept the complex sensitive. Chevron restarted some Israeli gas output, and EV demand chatter, like BYD order growth, added to the two-pronged story.
Right. And the other thing is renewables didn't just get a free pass. Module cost pressures and grid upgrade timelines were part of the narrative. So the sector was split. Traditional energy names got a near-term lift, while some renewables faces margin pressure.
And then crypto decided to be dramatic. Bitcoin rallied above $69,000 intraday, signaling renewed risk appetite. But at the same time, a major exploit hit the Drift protocol for about $285 million.
That one felt very ride the momentum, watch the tail risk. I mean, when you step back and look at this, crypto is still extremely headline sensitive. Strong upside, but big downside risk from security failures.
Honestly, I was a bit surprised by the scale of that Drift exploit. It's a reminder that DeFi governance and audits matter just as much as macro momentum.
Totally. Okay, short reaction.
Wow, big numbers.
Let's talk tech and AI. Big part of the tape. Product launches and AI and robotics adoption kept demand narratives for software, chip makers, and automation suppliers alive. Google and Apple headlines showed up in the flow, and Netflix product and content chatter was in the mix too.
Yes, momentum for chipmakers and cloud infrastructure tied to generative AI deployments continues to support CapEx narratives. Analysts note that order books and backlog will be key to separating durable demand from one-off pushes.
So, if you're following this sector, track CapEx commentary in corporate reports. CapEx talk was the real connective tissue linking tech, industrials, and materials today.
Moving into the stable, or mixed buckets, industrials had a constructive backdrop from that DoD plan and from factory AI adoption. But execution risks, like downtime monitoring debates, kept some names mixed.
Consumer and retail saw pockets of strength thanks to M&A and product moves, like Bed Bath & Beyond's Container Store deal. But integration and margin pressure are ongoing risks.
Communications and media had an interesting day too. Box office was strong for a few releases. SpaceX IPO chatter gave some space and media optimism, but Netflix ran into a legal setback in Rome that reminded people about regulatory and content risk.
Short reaction.
Not what anyone expected.
Utilities were on the weaker side. On one hand, the Department of Energy approved an Antares Mark Zero nuclear project, and hydrogen pilots got attention. On the other hand, a Texas probe into residential solar sales and lingering metal tariffs created headwinds.
Right. That sector is balancing long-term decarbonization investments with near-term regulatory and cost pressures, which makes earnings outcomes variable across utility business models.
Finance felt the heat from regulatory commentary. Jamie Dimon publicly criticized new Basel proposals, and some banks got wrapped up in politically sensitive program headlines. That raised volatility in the space.
Yeah, policy moves and liquidity in areas like HMBS and structured credit are near-term watch items for bank risk premia. Analysts note reputational flow is also playing a role here.
Cannabis was a patchwork day. Massachusetts had a regulatory deal. Minnesota announced about $50 million in sales, but mixed March numbers and state bans kept the sector choppy.
The takeaway there is that without federal clarity, this industry will keep reacting to state-level developments. Capital access and regulatory calendars drive the headline volatility.
Short reaction.
Interesting rotation.
Back to cross-sector themes. These were the connective threads. First, AI and CapEx rotaries. Tech, industrials, and materials move together because data center and AI builds need chips, specialty metals, and automation.
Second, defense and industrial linkage. Analysts are highlighting the cascading demand for semiconductors and materials from defense spending. Lead times mean pricing power could stick around for some suppliers.
Third, energy geopolitics versus renewables economics. Short-term crude sensitivity came from OPEC Plus and outages, while renewables face module cost and permitting questions, a real bifurcation.
Fourth, regulatory and security crosswinds. Finance and utilities were hampered by probes and proposals, while crypto and some media names had security and legal risks. Those headlines amplified cross-market volatility.
And fifth, M&A in retail. Consolidation is a growing theme, but integration execution will determine winners and losers.
Let's highlight the most significant single moves and the context quickly. 1. Bitcoin above $69,000. Momentum was real, but the $285 million exploit at Drift tempered the rally and highlighted systemic security risk.
2. The $1.5 trillion DoD plan. That drove industrial and materials interest and reinforced a multi-year CapEx narrative tied to defense.
3. Materials financing and restarts. The $520 million DRI financing and Stibnite Hill restarts underscored investor appetite for upstream supply security.
4. Utilities. Nuclear approvals versus solar probes. The sector was balancing long-term baseload optimism with near-term regulatory worries.
5. Communications and media. SpaceX IPO chatter and box office strength were positives, but platform legal issues kept volatility elevated.
6. Finance. Basel proposal pushback and politically charged program headlines drove headline risk across banks.
7. Cannabis. State-by-state policy continues to create a mixed picture for growth and capital access.
Okay, practical takeaways. This is all informational only. First, reassess CapEx and supply chain exposure. Data center and AI builds support reweighting towards suppliers of semiconductors, specialty metals, DRI steel, and automation. But you want to watch order books and lead times.
Second, monitor regulatory calendars closely. FDA trial reforms, state cannabis windows, and Basel timelines can all trigger idiosyncratic moves over the next 3 to 6 months.
Third, stress test crypto allocations for security risk. The Drift exploit showed how a single technical failure can wipe out big chunks of value in DeFi. Scenario planning matters.
Fourth, watch energy project economics, not just output. OPEC Plus moves affect sentiment near-term, but module costs, grid upgrades, and permitting will shape renewables margins longer-term.
Fifth, prioritize names with diversified regulatory footprints. Finance, utilities, and cannabis are sensitive to policy shocks. Diversification and compliance track records help reduce headline risk.
And 6, on retail M&A. Integration milestones matter. Early execution on stores, inventory, and systems typically decides whether a deal was value-creating.
Final forward look. As we moved into the second quarter, the interplay between durable CapEx cycles, AI, defense, energy transition, and acute headline risk, hacks, probes, governance fights, was the story.
Short-term, price action was headline-driven, but analysts suggest differentiating between one-off shocks and durable demand shifts that support multi-year narratives.
Quick closing takeaways. Thematic buyers favored capacity and materials today. Regulatory and security headlines capped gains in utilities, finance, and crypto. And order visibility plus execution will be key.
Yeah, keep an eye on the regulatory calendar, security audits in crypto, OPEC Plus meetings, and Q1 earnings for CapEx commentary. Those will be the near-term catalysts to watch.
If you want the notes or have a question about anything we covered, head to stockalpha.ai and use the Q&A feature. You can ask us directly and we'll answer live. For more market analysis and sector reads, visit stockalpha.ai.
Thanks for listening. We'll be back after the next close with more recaps and takeaways. Stay curious, stay skeptical, and keep an eye on those headlines.
Bye, everyone, and remember, this was informational only, not investment advice. Ask us your questions at stockalpha.ai, and we'll dig in together next time.